Have you ever wondered exactly how a retirement annuity helps you to save on tax? Or perhaps you've heard of your friends or colleagues saying that when they complete their tax return, they're able to get some money back, and mainly because of having a retirement annuity in place. Or maybe you just have this feeling that you're paying more tax than you should. Well, if this is you, this video is going to be immensely powerful. I'm going to be guiding you on exactly how a retirement annuity can help you to reduce your taxes. In fact, it could even help you to get to a stage where you can start getting refunds from SARS, as opposed to paying money in. So let's get started. Now we're heading off first to the SARS tax guide. And don't worry, this video is not going to be intense. There's no calculations that you have to do. I'll do all of it for you. But I want to give you a framework so that you can understand exactly how the tax system works, exactly how SARS is seeing this. Now, you're going to follow along using the examples I'm put in place here. However, you can then watch the video again so that you have a better understanding, and then use your figures into this calculation that I'm doing. So I'm giving you the framework. Now, before we get started, I'll introduce myself. I'm Devan Naika. I've been in financial services since 2004. I'm a certified financial planner. It's about the highest qualification that we can get in the financial planning profession. And I've been helping clients save hundreds, millions of rands in tax over the last few years. So I'm hoping, but actually I know that this video, once you implement it, it's going to put you in that position where you can start to save on tax. Now, here's the tax guide. I'm using the tax guide that is current according to when this video was produced. So remember, you want to make sure that you're using something that's current for you as well. This is free, by the way. You can download this from SARS's website. The first thing I want you to understand here is when it comes to income, your income is determined according to a sliding scale. So you can see it on the screen. As your income starts to increase, the percentage tax that you are paying also increases. So the more you earn, the more tax that you're going to pay, right? That's what the sliding scale is all about. Now, I want to quickly head over to the iPad so I can give you a better understanding of this, a practical understanding of this. So I want you to imagine that you are earning an income. Well, let's look at your various income sources. So I'll say your first income source is your salary. So you're collecting an income from your salary. Then you're collecting, let's say, a rental income. Perhaps you might have money in the bank or some kind of unit trust investment, and you're earning interest. Now, in addition to that, there are other sources of income. So if your company is contributing towards a pension fund or they're contributing towards your medical aid, that's also part of income. So it's what we would know it as fringe benefits, but all of this SARS regards as income, which means when you're doing your tax return, when SARS is completing this for you, right, they are adding all these values together. See, they're adding all of it, and that becomes your total earning. So now we're going to head back onto the tax guide. If you have a look at the tax guide, as your income starts to increase, you notice your tax rate starts to increase. And in my example, let's assume that your total income comes to 500,000. Just to use a round figure again for the math to look easy. So 500,000 will sit you inside this bracket here, which means the rate of tax is 36%. So we'll just keep that in mind. Now, in addition to this, I'm going to scroll further down. You have what is called deductions, and I'll show you where this actually starts in on the tax guide. So here you can see deductions. And then SARS talks about retirement fund contributions. Now, it's a bit of a long paragraph here. We won't go into the details because this is not a technical video, but I just want to give you the framework, right, for a better understanding. And I also want you to be able to just take some kind of action so that you can start saving on tax. So the figure I want you to focus on is this figure here, 27.5%. And what it means is, we'll head back onto the iPad. So remember the 27.5% figure that we just calculated. So when SARS is determining your tax, I said, remember, they're going to be adding all of these figures together. Now, very basically, SARS would then allow you a deduction here. And that deduction is equal to 27.5% of whatever that total is. Now, just to make the math look easy, we're saying that this total comes to 500,000. So you might be earning a salary, rental income, interest, fringe benefits, however that income is determined. In my example, I'm going to say that the total income that's coming from here is 500,000. So total 500,000, which means you saw it, you were sitting on the 36% tax bracket. Now, from a deduction perspective, you can contribute 27.5% of this 500,000. And that then can be used as a contribution towards a retirement annuity, or contribution if you have a pension fund or a company provident fund, all of that, right? So this deduction here doesn't necessarily have to be from a retirement annuity. In fact, let me write it down so that you can see where this is coming from. You could have a retirement annuity. That's one option. You could have a pension fund, or you could be part of a company that has a provident fund. Now, all of these are retirement sources. It doesn't matter which one you're contributing toward, but all of them will be added. And what's the ceiling that you have? The maximum you contribute is 27.5%. So once each of these are added, from a tax perspective, you can't get any more than 27.5%. So let's go see figures-wise how this works out to. So remember I said 500,000 here. That's your total earning, right? So we'll do a quick calculation to see how does this work. And I'll actually do the calculation with you. So we have 500,000. And I'm going to be working 27.5%. And that is 137,500. So 137,500. So we'll remember that figure. And this deduction now, is 137,500. So what it means from a tax perspective is total earning was 500,000. You've contributed this. Deduction means to deduct, to remove, to reduce. So initially SARS said, hey, you're actually earning 500,000. When they see that you contributed towards retirement annuity, pension fund, provident fund, and in our example, it's 137,500, they're going to deduct it. So heading back onto the calculator, we'll do the calculation together, right? So we said the total income that you had was 500,000. There's your total income, minus 137,500. That leaves you with 362,500. So I'll put that new figure in here, 362,500. Let's head back onto the iPad. So now you can see I've got 362,500. Now here's the secret. Are you ready? That's the new income that you've earned. So if we go back to the tax table, back on the SARS tax table, I now want you to see where does 362,500 fit in. So if you look, remember 500,000 was fitting in here. You were on the 36% tax bracket. And now we're saying 362,500. So that's fitting in here. Now notice what's happened. It's one tax bracket lower, one scale lower. So you were on 36%. You should have been on 31%. So what does that mean? It means you're getting money back from SARS. It means you're getting a refund. Because SARS initially taxed you on this scale. They taxed you on this scale with a 36%. Once they see that you've had the contributions to the retirement annuity, pension fund, provident fund, assuming again my example, it now means they can minus that from your income. So when they reduce it, it's them dropping you down a tax bracket. So I want you to see from a tax perspective, what does it mean? It means whatever the contribution was on this side, your tax, you paid more than what you should have paid. When SARS analyzes and says, hey, we should have been taxing you on this income, they now realize that there's money that's due. You've paid more than what you should have paid, which then means that you're now going to start to get money come back in. And this is how the refund happens. So we're going to do a quick recap here, and I want you to watch the video again, just so that you understand the framework, and then you can start using figures for yourself. Right? So quick recap. Remember, when SARS works on your income is determined by multiple sources, right, to get your total income. The deduction that you get for a retirement annuity doesn't necessarily have to be for a retirement annuity. It could be a pension fund or a provident fund, as long as you're contributing to some retirement source, right? Either of these can work. So assuming you're contributing 27.5%, then you can get the maximum as a deduction. Now, if you contribute more, it doesn't mean you're losing out. It just means they can only give you 27.5%, as a deduction for that tax year. The balance gets carried over to the following year. So you're not losing out. You're still going to have a surplus that they owe you that they can deduct from income the following year. If you're contributing less, that means you've got a gap now. It means you can go and contribute more in the future or even right now, and that could help you again from a tax perspective. You want to master this because in essence, what's happening is if you're not getting to the maximum deduction, you are paying more tax than you should. So ideally, you want to try and push this to as high as you can just from a tax perspective, leaving out the fact that obviously when you retire, by saving more now, you're going to get a huge amount at the end. So then SARS now looks at your total income, they'll minus the deduction, and that gives them this income. And that's the income that you should be taxed on. Great. So I hope you found this video helpful. In fact, I want you to comment below. Is this the best or the easiest explanation on how a retirement annuity helps you to save on tax? So comment below and share with me. And I also want to know from you, how have you used this video in order to save on tax? So post below, start to tell me how much you've been saving on money, saving on taxes, what sort of refunds have been coming through to you once you apply this information. And I'll make sure I personally reply to you. Now, this video is part of a series of the Retirement Annuity series. I am going to be guiding you on how to get the best outcome from that retirement annuity. So make sure you watch the previous videos and also the videos that's to come on this. And the easiest way to do that is just to subscribe onto the channel so that you're able to see as soon as we produce new content. Great. I'll chat soon.